results of the meeting of the Federal Open Market Committee have affected the commodities as well. Oil quotes continue to decline. If the U.S. Federal Reserve indeed begins to roll back its quantitative easing program, this will reduce the liquidity in the market. As a result, the speculative activity will slow down. However, the ratio of demand and supply is much more important for oil prices. Yesterday, the data on crude oil inventories was published in the US. As you can see on the chart, crude volumes have dropped. As a rule, this serves as a supporting factor for oil prices. Will oil stop its decline in the near term, or will it continue to fall? Let's find out together. Brent crude extended its weakness yesterday. In less than 24 hours, the European benchmark lost nearly 4.5% of its value. This is actually a lot for such a short period of time. We could observe such oversold conditions on Brent earlier. This may trigger an upside correction, especially amid declining crude inventories. That is why, according to analysts, Brent is unlikely to fall below $66 a barrel. Then a correction may follow in the range between $65 and $68 per barrel. Likewise, WTI is trading in a downtrend. Here the support is found at the level of $62 per barrel. This is where the price may rebound and rise towards the area of $64, $65 a barrel, which goes in line with its real market value. The US dollar notably advanced across the board after the release of the FOMC meeting results. The dollar-ruble pair returned to the resistance level of 74. Since the beginning of the week, the greenback has strengthened against the Russian ruble by 1.5%. To continue its uptrend, the pair needs to hold above the level of 74.30 rubles per US dollar. This will open the way towards the area of 74.75. Otherwise, we will see a decrease in the volume of long positions on the pair, and the price may pull back from the resistance level. While the market receives more and more clues about upcoming changes in the Fed's monetary policy, the European Central Bank keeps its stimulus program unchanged. This factor is putting pressure on the euro. As for the euro-ruble pair, it continues to move lower. According to the chart, the nearest support is located at the mark of 86 rubles per euro. This is where the pair entered a correction. After a short, flat movement, the ruble has finally found direction. The reason for this may be the FOMC meeting, yet it's not entirely true. The ruble began to depreciate long before the minutes were published. The minutes release had only reinforced this trend. The thing is, the ruble was standing still while other currencies were declining slowly but steadily. The balance had to be found, and this is actually what happened with the ruble yesterday, right after the start of the session. Such a strong movement may be later followed by a pullback. However, as long as the US dollar is moving higher, the ruble is unlikely to pull back. The Russian currency is expected to consolidate near the current levels. You've watched Daily Financial News with me, Anna Kasatkina. Thank you for watching and stay tuned.